By 2030, in just 6 years, over 73 million baby boomers will have entered retirement. That's not just a demographic shift, it's a tidal wave of money moving through global markets, and silver is directly in its path. Hey, welcome back, or if you're new here, welcome. This channel is where we break down real macro trends and turn them into actionable precious metals intelligence. Today, we're diving deep into the silver tsunami. What it is, why it matters right now, and exactly how it should be shaping your silver investment strategy. We've got a lot to cover, so let's get straight into it. So first, what exactly is the silver tsunami? The term refers to the largest demographic retirement wave in modern history. By 2035, 1 in 5 Americans will be over 65. In Japan and Europe, that number is already past 28%. Here's why this is a crisis for traditional investments. Number one, pension funds are underfunded by an estimated $11 trillion globally. That's trillion with a T. Number two, as retirees shift from wealth accumulation to wealth drawdown, they sell equities, which puts downward pressure on stocks. Number three, governments responding to this crisis are printing money, running deficits, and holding rates at artificially low levels, all of which erode the purchasing power of cash and bonds. So the very tools retirees were told would protect them, stocks, bonds, pensions, are under serious structural stress. And that creates a vacuum. And nature and markets hate a vacuum. Now, let's talk about why silver specifically is in the crosshairs of all this. Silver is unique. It's not just a monetary metal, it's an industrial powerhouse. Over 50% of silver demand comes from industrial applications, solar panels, electric vehicles, semiconductors, medical devices. And here's the key insight most investors miss. As governments try to solve the pension crisis by stimulating economic growth through green energy spending, infrastructure, and technology, they're turbocharging silver's industrial demand at the exact same moment that monetary uncertainty is driving investment demand. That's a supply squeeze from two directions simultaneously. Meanwhile, silver mining supply has been essentially flat for a decade. New mine development takes 10 to 15 years. There is no quick fix on the supply side, so you've got surging demand meeting stagnant supply during a period of historic monetary instability. That is a setup that doesn't come along very often. Now, I want to show you something that very few people in the mainstream media are talking about, and this is the part that should really get your attention. Historically, the gold to silver ratio, meaning how many ounces of silver it takes to buy 1 ounce of gold, averages around 60 to 80. Right now, that ratio is sitting around 88 to 1. In plain English, silver is historically undervalued relative to gold. The last time we saw a silver tsunami of demographic pressure combined with monetary debasement was the 1970s. During that decade, silver went from under $2 an ounce to nearly $50 an ounce. Now, I am not saying that's guaranteed to happen again. Markets are complex. But the structural parallels are striking. And smart investors look at structural parallels. There are 3 specific catalysts I'm watching right now that could trigger the next major move in silver, and I'll break all 3 of those down in part 2. But before we get there, I want you to understand one thing. The silver tsunami isn't just a trend, it is a multi-decade structural force. The demographics don't lie, and when structural forces meet undervalued assets, history tends to reward the patient investor. Thanks for watching, and I'll see you in part 2. In our last video, we broke down the silver tsunami, explained why traditional investments are feeling the heat, and showed you why silver's fundamentals are so incredibly strong right now. If you missed that, the link is in the description. In this video, I'm giving you the 3 specific catalysts to watch. My core thesis on silver and what it all means for your portfolio. Let's get straight into it. Catalyst number 1 is central bank accumulation. For the last 2 years, central banks around the world have been buying gold at a pace we haven't seen in half a century, snapping up over 1,000 tons each year. Now, pay close attention to this. When central banks start stockpiling hard assets, institutional and retail investors always follow their lead. Silver, being gold's undervalued cousin, tends to move right along with it, but with even more momentum. It's like gold's faster, more agile sibling. Catalyst number 2 is the green energy supercycle. The International Energy Agency predicts that by 2030, just solar panel production alone will need 10 times more silver every year than it uses today. That's a tenfold increase. On top of that, the explosive growth in electric vehicles adds another massive layer of industrial demand. This isn't just speculation. These are based on infrastructure commitments already signed into law by governments all over the globe. The demand is locked in. And catalyst number 3, the acceleration of currency debasement. Global government debt has now soared past a mind-boggling $315 trillion, with aging populations requiring more spending on healthcare and pensions. That number is only heading in one direction, up. History shows us that when a country's debt to GDP ratio goes above 130%, a line many developed nations have already crossed, The purchasing power of their currency starts to collapse. In those moments, hard assets always win, every single time. So here's my core thesis, the key takeaway. Silver represents a rare and powerful convergence. It's an industrial growth story and a monetary safe haven, all at a time when both of those drivers are accelerating at the same time. And yet, it's still trading at a 40-year average discount to gold. In my opinion, that unique combination presents one of the most asymmetric opportunities we've seen in precious metals for a generation. Let's tie this all together. The silver tsunami isn't just a fleeting news headline, it's a structural, multi-decade shift in demographics and finance. It's putting real, sustained pressure on pension systems, government balance sheets, and the returns you can expect from traditional paper assets. Silver sits right at the intersection of everything that follows from that pressure. You have monetary instability driving demand for safe haven assets, green energy policies driving industrial demand, and its historical undervaluation setting up a massive mean reversion opportunity. The three catalysts to watch are central bank buying, the green energy supercycle, and accelerating currency debasement. The key metric I'm tracking personally is the gold to silver ratio. If that ratio compresses from its current level around 88 back toward its historical average of 65 to 70, while both metals are rising, the gains in silver will significantly outpace gold. Now, of course, none of this is financial advice. You should always do your own research and speak with a qualified financial advisor before making any investment decisions. But understanding these powerful macro trends puts you miles ahead of the average investor. Now, I really want to hear from you. Do you believe the silver tsunami will cause silver prices to surge? Or do you think the market has already priced all of this in? Drop your opinion in the comments below. I read every single one, and I'll be personally replying to the best comments this week. If this video opened your eyes to something you hadn't considered before, please hit that like button. It genuinely helps our channel reach more people who are trying to make smart moves with their money. And if you're serious about staying ahead of the trends in precious metals, subscribe and hit the notification bell. We post in-depth analysis like this every single week, and our subscribers consistently tell us this is the most actionable metals content they've found anywhere on YouTube. I'll see you in the next one. Stay sharp, stay positioned, and remember, the best investors don't just react to the wave, they're already standing on the shore when it arrives. Take care.